guys, John here, Mr. Forex Fire. This is going to be part 2 of the lower time frame market up to the higher time frame and having your intermediary price. Bit of a mouthful that, and I'm going to go a little bit more in depth and sort of try and give it a bit more of a deeper explanation on how you structurally mark it out, why we mark it out, and how it's going to help you define the higher time frame, but help you understand the fractal nature inside of the lower time frame and the intermediary price with the fractal candles. Okay, so I'm just going to share the screen. Right, so what we've got here is the USD, EUD USD. Okay, I'm just gonna get that a little bit bigger. So what we've got, we're going to determine a couple of things. Okay, we've just got a brush. So we've got a high point here, a low, high. We've come down and broke this structure, so that's a low. Okay, come up. This will be the high. We come down, we broke the structure. We would use that. We would basically use that as a higher high. Okay, we could do that, although we would use that. This one here, just go back, go back, go back, go back. Use that as a high. We've come down to make a low, okay? And then as we've come down, we haven't quite broke the structure of this, so we're up here. And then as we come down, we broke the structure of this. So that's your basic preference. Okay, and it's easy to mark these out, to be fair. So from there, what you're doing structurally, you can then get your path on your path, and you just mark this out. You go from here to here, up to here, down to here, up to here, down to here, up to there, and you're just doing swing highs, swing lows. Okay, now again, this just helps you fractally understand. Let's have a look. This is just going to help you understand what's happening price action wise between the candles. Okay, so let's just sort of open this up. So as you can see, we just make this that little bit bigger. Within the price of the swing high, the swing low, you can see we had a bit of a retracement here. So there can be what we call the fire block. Okay, you're technically waiting for push out of that area. You got it here, and then you get the retracement. Okay, so we pull that out. Your retracement is generally 50%. We got that and a little bit more. So that would have been a great trade. Okay, from there, as it's done its push down, that's down to the next swing point. It's given around about 110 pips or so. But again, from there, what we have intermediary price where inside of that, you've still got these swing low, swing high, swing low, swing high. You see what I mean? So it's all fractal. Just get rid of that. But again, this helps you determine within the nature of the swing high to the swing low. You've got, again, you can determine a fire block, and the fire block can just simply be between the extended impulse move, intermediary swing high to a swing low. So let's take a look at this, for example, within that there, down to that there. Drag it out. Again, you see, we had the breakout. You can get in on any of these sort of quarter points or the 25 areas. If we just go to the retracement from there up to the corner, again, 25 area. It didn't quite come to meet the half. You could have gotten in here and got a push for maybe around about 40 pips or so. Come down 30 pips or so. So again, this is just going to help you define these areas with a bit more ease. I'm just going to see if I can get some of these off. Right, so again, this here, just make it a little bit thicker. So I can make it thicker. Right, so there we are with a little bit thicker. And what I'm going to do, I'm going to go up the time frames again, okay? Just to show you how it works. To identify them, you're just basically going from a swing high point, okay? On the 15-minute, you go back around about a month or so, around about the 11th of June on here. You've got a swing high. You've come down to a low. Come back into a retracement, high. You've got a low, high, break structure, obviously low, retracement. Break of structure is the new low point. Retracement, it's a protected. So these, as they come down, just to give you a bit more of an example. So you've got that there. You've got that there, that there, that there, and that there. So these areas, as they come down, you've got the push or the impulse, retracement, impulse, retracement, impulse, retracement, impulse, retracement. And each time you've got this retracement, you've got these protected high points, okay? So on the higher time frames, let's say, let's get rid of this. Let's say, for an example, if we have this here as the last down on the order block, okay, the last down before the push out, right? And we've broken 1, 2, 3 structure points. You can see this is now was on a retrace down. We could technically, and I'm not going to say it's going to happen, but we could technically have this sort of thing happen. We could have this come down, play down into a 50%. That 50%, see how keen eye there, 50% straight on. That 50% could technically come in to play into any one on the intermediary price, could play into any one of these. We've already came to that structure point because that's a high, okay? You've got a 1 there, you've got a 1 there. You could technically use that there. However, what I want to do, because I don't want to confuse anything, I want to make that one purple because that's on the higher time frame, what we've marked up, if that makes sense, on the way down, on the downturn. So what you could have is basically an entry on here, okay? This here is your protected. This here is your protected low point. So the composite man or the bankers strategy or the smart money concepts, they do not want to go any lower than this point simply because if they do, they're then going to be in negative sort of equity because they've pushed the price down. They want to come down and mitigate certain structure points and areas within here, thus being the order block, which could be the last down before the up, or in this instance, it could be the fire block, which is the actual last impulse move from the swing high to the next lower part. So we've got that as an extended order block sort of thing. From there, you've got a grid, which is our quarters at 0.25, the 0.5, 0.75, the 1 on the top, 0 on the bottom, coming back in to sort of respect. Let's take a look. Coming back in to respect this sort of area, again, that's going to be like a 1 to 6, okay? However, once you start pushing from the entry and start coming up, you are looking to take partials, okay? So as we come back up, to meet the criteria of a previous sort of trend as we're going on the reversal, these structure points on the way back up as price meets this area, as price starts to meet this area, you're then going to be looking to possibly take 50% partial. Okay, so what I mean by that is, let's say you've got a lot size of a three lot size. For those that are possibly trading on funded accounts, you possibly could be using a 3 lot size. You could go onto your MT4 on your phone or on your desktop, go to modify or close trade. It then opens up your actual price action at that time. You could then go to the 3.0, change it to 1.5. So that's closing out half of your trade. And then what you're doing is you're basically shifting where your stop loss is here, okay, to then possibly look on the intermediary price at another sort of low area. So let's say you're moving your stop loss to here, this area here, okay? So you're moving your stop loss to here. From there, you've closed out half the trade of a 1.5 lot size. Maybe for instance, you might have took a couple of £100 on the preference that this is still going to climb, okay? However, because you've moved your stop loss, if this was to come down, touch this area, you're just going to be stopped out, but you've already closed half the trade because you've got your stop loss a little bit higher. This bit here, you're still going to grab profits based upon this because you've moved your stop loss to here, okay? And again, what we're looking at on the upturn, on the higher time frame, is simply the more substantial areas of a returned sort of a price, which is going to be this sort of stuff here. That's going to be your main target for liquidity. But on the reversal, on the trend of the price, you're looking to take out parts of your trade on the way. And again, as you hit these individual areas as they move up, again, if you've already taken out half of your lot size on the first structure point, okay, and you're happy with that, when you hit number 2, okay, you don't need to take any further sort of lot size out. You simply move the stop loss to the next sort of structure point. And as you climb on to number 3, again, this price might have moved up like this. You simply just move the stop loss again, move the stop loss again. You might have a 4th structure point. Again, as it's come down and went up, you move your stop loss again, and you're moving it with the price action, okay, until either 1, you actually hit this structure point here, and that's your TP, or the price decides to then come back down to maybe, let's say for example, for the price to come back down and sort of hit your stop loss. But again, what happens there is, not only have you had your half partial taken on the initial trade, you've been managing your trade on its way up towards these structure points. And again, guys, just to go a little bit deeper as well, I hope this is starting to make sense for you. Again, this was based upon the 15 minutes. Just a recap, we've got the high, we've come down to the low, we've got the retracement. This is the retracement area. So we've got the high, the lower high, okay? We've got the lower low because we broke the structure, the lower high, the lower low, broke structure, lower high because we're not retracing past this area, lower low, again, lower high, lower low. This at the moment is starting to creep back up. We could possibly be looking at an entry coming back down on this on this demand area, which is an extended order block, as I mentioned. Take your partials based upon the intermediary price on this strength of an impulse move. And again, just to show you how good this is, we go from the 15-minute up to the 4-hour. And you can see, again, structure point, we've got there, 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 here, there, And this is bang on the money. Okay, guys. And that guys, is how you can sort of take, because when it comes to trading Forex and things like that, there's a lot of noise, a lot of fluff. It's the way I teach and the way I sort of learn from other places and things like that. I take things in like a sponge, and it's my place to try and condense all the information that I've soaked into my head and make it more manageable, make it more easier to understand, and then put this across inside of the Discord that I have, which is Forex Fire. I hope you're enjoying the content. I mean, this will be pushed into the Forex Fire group as well. I hope you're enjoying the content that I do. I hope this part 2 of the video a little bit more in depth on not just how you sort of mark out your 15 minutes swing highs and swing lows based upon the structure point of the high. On this instance, on the high, the lower high, the higher low, the lower low, the high low, the lower low. And without that break and structure, you can get your intermediary price. On the reversal, you use that past price structure to then become your take partial areas between the big structure point of the swing, and the bigger TP is always going to be the higher side of that initial impulse move, if that makes sense. Between the top and the bottom is intermediary fractal price. That is where you're going to start taking your partials on your way up to the higher side, or if you're doing it on a sell, you do it the same going down on the lower side. Okay, guys, so I hope you found that useful. Please drop your comments below, let me know. See you inside the Discord. Catch you later.